Welcome to BitMart's live AMA session with NAOS. I'm Jason from BitMart, and today we have Kevin Zhang, the founder of NAOS Finance. It's a pleasure to have you here.
Hey, thanks, Jason. It's great to be part of the BitMart family.
Yeah, Kevin is a serial entrepreneur. He has founded Zalora, acquired by Central Group, Foodpanda, acquired by Delivery Hero, Lazada, acquired by Alibaba Group, and Groupon China, acquired by Tencent Holdings. He has also led strategic investments for the Walt Disney Company and Alibaba Group. The list just goes on. I think before we ask Kevin any questions, the question everyone should be asking themselves is, what's a good time to get into NAOS Finance? Well, let me tell you the answer to that. The time is NAOS. I got to explain how the AMA is going to work. So
I thought about that. That's a good one.
It's good. We do have a few questions we gathered beforehand that we feel would give Kevin here a chance to really share his vision and tell us what NAOS is all about. After we get through these, we'll open the floor up and start taking questions from our viewers. So 5 questions will be selected from YouTube live chat for Kevin to answer. Please include your YouTube IDs. You can find this under account, your channel, and your URL when asking questions. Participants whose questions are selected to answer will be rewarded with 60 NAOS each. Another way to participate is 20 lucky winners who submit creative pictures of themselves, showing us proof that you're watching this video on Twitter, will be rewarded with 50 NAOS each. And be sure to @BitMart Exchange. So let's get started. To start, could you just give us a little brief intro about NAOS Finance?
Yep, sure. So the way we look at NAOS is that NAOS is really the bridge between centralized finance first and decentralized finances, right? So what we're trying to do here is that we're building an infrastructure for the two, right? So on the DeFi side, we're actually giving the DeFi users or DeFi ecosystem the opportunity to go beyond the existing user cases, right? So basically, the opportunity to tap into the real world. So the way we look at DeFi right now is that many of the project has proven the business model, proven the unit economics. So by taking that into the real world, that's basically the ambition here, right? And for the real world finance is basically an alternative way to financing, right? So instead of go to your banks, your lending institutions, now you can tap into a global cheaper cost of capital, basically funded by the community, funded by DeFi protocols, or even funded by other institutions at a different continent. So that's essentially what NAOS is building here.
Really amazing stuff you're building. I found a picture on your website. You know how in crypto people like saying to the moon, but this man here is building a galaxy. We're going to ask him a series of questions to dissect what this is all about.
Sure.
So the first one would be, now that NAOS Galaxy testnet has not launched, could you explain how the NAOS protocol works?
Yeah. So the NAOS protocol actually really boils down to 2 sub-protocols, right? So the way we're kind of like looking at this is that how do we emulate the entire lending process in traditional finance, right? So you have to have liquidity. You have to have like a banking process, right? You have to have insurance. So we're actually looking at this from an ecosystem perspective. And we actually just narrowed down to 3 major components, right? So the alpha and beta pool. The alpha pool is really the lending process that emulates the banking process, right? The beta pool simulates the insurance, right? And formation actually it's a liquidity, right? So it's basically how we get liquidity fall into the alpha and beta pool. So the whole protocol actually works in a way that we actually have a couple of different ways to attract liquidity. So through partnerships, right? So our partnership with MakerDAO is one case in point. So we will be tokenizing real world assets and use that as collateral and be using and placing into MakerDAO's vault to get equivalent amount of DAI as a lending capital. But at the same time, we're also building our formation that we can actually amass liquidity from the community and from the entire DeFi ecosystem. So that's kind of how we get the whole protocol to run in more of a high level perspective. But I'm happy to get down to the details with each.
Gotcha. So how can someone like a user like me participate to earn yield on your platform?
Oh, there are multiple ways. So depending on your risk profile, so we're actually coming up with a guidebook, right? So I think formation is created to satisfy for people with all sort of risk preferences, right? So let's just say you are a stablecoin holders, right? You actually can participate in NAOS protocol by just holding stables. If you happen to be a NAOS token holders, there are a couple of different ways for you to boost the yield, right? So let's just say you're a stable coin holder. Let's take a more of an extreme scenario, right? Let's just say you were new to DeFi, right? You don't know how to do staking, right? And you don't know how the yield really works. You don't know how compound generates yield. You don't understand the underlying mechanism or the underlying asset that's behind all those DeFis, right? So you wanted to get involved with something a little bit more traditional, right? So you come across NAOS. You understand that the stablecoin that you put into the asset pool, that's actually backed by real world assets, right? Real world assets that are income generating that you understand, right? So corporate loans, bonds, account receivables, supply chain finances, all those stuff that you know is tangible in the real world, right? So those are the type of asset that or the user who will be able to put their money into the alpha pool. The alpha pool basically take your liquidity and turn around and give it to the borrowers as lending capital. So that's one way to do it. Another way for you to do it is to take your stable coins, deposit into formation, right, which gives you NUSD, which is the NAOS protocol stable coins, and you can take the NUSD to stake into the beta pool, which is an insurance pool. Slightly higher risk, but again, your principal is actually protected within formation, right? So there are a couple of different ways for you to do it. And then if you happen to be a NAOS token holder, in addition to the stablecoin deposit into the alpha pool, you can deposit or you can stake NAOS token to give your yield a very nice boost on the yield.
Great. Can you introduce the tokenomics behind that? What's the utility of NAOS token?
Yeah. So I would categorize NAOS token as NAOS token is a governance token, right? So it's a way for user to participate in the network, right? There are a couple of things that they can do. Number one, asset onboarding process, right? So we will open up the due diligence and asset evaluation process to the community, and the community will be able to, or the token holders will be able to review the documentations and vote on asset onboarding process, set the interest rate, right? All the key metrics to approve an assets, right? They will also be able to direct the direction of product feature updates, basically directing where NAOS is going to go after, and also changing the allocation for various reward pools that we have. So in addition to governance, I will also consider NAOS as a right to entry, right? So for lenders, by holding NAOS tokens, you'll be able to boost your yield within the NAOS protocol. And for borrowers, we will be requiring the borrowers to deposit NAOS tokens into the insurance pool so they have some skin in the game.
Mm-hmm. You've been referencing the RWA, real world assets, quite a bit, and I think that's how NAOS Finance is uniquely positioned. But could you elaborate where these RWAs are coming from?
The real world assets actually comes from everywhere, right? So if you look at the global credit gap, right, it currently stands at $3.something trillion, right? We're actually tackling the entire financing industry, right? The traditional finance industry, whether it be banks, traditional credit unions, fintech lending platforms, right? So we're actually creating this global platform for users to lend and borrow money, right? So that's kind of where we are. So when it comes down to real world assets, there are a couple things that strikes me given my time in Southeast Asia, right? We have seen incredible companies, right, with growth like incredible growth trajectories, incredible revenue streams, but they're just unable to receive banking facilities from their local countries, right? Take Southeast Asia, for example, right? Most of the banks are actually servicing the conglomerates, right? The top 1% of companies. The SMEs, right, regardless of their credit standings, they're just unable to get the loan, right? Even if they do, they're getting it at astronomical high rate that just doesn't make any sense, right? And that's why you see a lot of banks in Korea, in Japan, or even Europe are coming into the region, providing banking facility, but regulation stands the way, right? So we see those are emerging markets as one of the biggest Aussie growth factor to really channel those real world assets on chain, right? But in developed countries like the US, even Europe, right? I think similar problem happen from time to time, right? So one of the Fortune 500 companies that we're working with right now, they have no problem receiving banking facilities in the US, right? But then when they expand, say, into Africa or South America, they have to renegotiate with the local banks on banking facilities, right? The credit they have in the US no longer applies in those new regions, right? So now they are looking to tap into alternative way of financing, specifically from DeFi.
Gotcha. We're at the halfway point. I just want to remind our viewers that for participation on Twitter, you are still watching the video here on YouTube. You just want to tweet at BitMart Exchange right now or later, showing us proof that you're watching this video to be eligible for 50 NAOS. The next question would be, most RWA that NAOS is going to bring on-chain are non-standard assets. So how do you tokenize these assets?
Right. So we're doing it through MFTs, right? So I know NFT is one of the hottest topics right now in the market, but we don't see MFT as a representation of the asset that meant to be traded or meant to be collected, right? The way we look at MFT is it's an essential tool as part of the NAOS ecosystem, right? Because every financial assets are very different in a way that you have different tenure, different durations, different interest rate, different risk factors, right? So every single financial asset is unique, right? And there's no better representation of those uniqueness than NFT. So the way we do it is to tokenize those real world assets into NFTs, right? And then deposit those NFT into a trust, right? The trust is independently run, segregated from NAOS, the asset originator, or the funding partner or lending protocols. So in case of a default, the trust will be able to liquidate those assets independently, right? And the trust is actually managed by independent committee members to make sure that they're under no bias execution directions, right? So the way we do it is that once the NFTs are being tokenized and deposited into the trust, it's really served as more like a mutual fund structure, right? So you have different stocks, different bonds in the mutual funds, but you can issue equal share to represent the overall value of the mutual fund. So that's kind of the way we handle this. So first tokenize the asset into NFT and convert them into ERC20 tokens.
Gotcha. Very cool. I've asked you about being a user and how I could earn yields earlier, but what if I'm a malicious user? How does NAOS handle its risk management for RWA, and how do you tackle bad loans?
Right. So this is definitely one of the major concerns that has our top priority, right? So default is definitely, I would say, is inevitable, right? When it comes to financial assets, but we are managing our risk to, first of all, I think at the early stage we have the liberty to handpick a few selected partners to work with, right? So obviously we're working from the top to the bottom, right? So when you look at fintech companies, right, the way fintech works is that they work from the bottom to the top, right? So in emerging markets, right, where the top 1% are servicing by the banks, the bottom 99% are servicing the financial fintech companies. So the fintech company has to work their way up to get better assets, right? To compete with the banks. But we're actually doing it a little bit differently. We're working from the top down. So the way we work is that we first hand select top quality borrowers across the world, right? Right now we have some Fortune 500 company, we have multinational conglomerates, we have some of the largest fintech company based in Southeast Asia and Asia, right? The way we wanted to do it is that through the lending process, right, we will be able to create a repayment record in history, right? Quote unquote, we want to create a FICO score for all those borrowers, right? Just do their repayment histories and track records with us, right? So the way we look at default risk is that we have to filter out or de-risk at the very beginning, but at the same time, we have created a couple mechanisms to counter the potential of default. So as I mentioned earlier, with the beta pool that we have, right? So that is serving as a first loss guarantee. Should a part of the asset went default, the beta will actually come in and make sure the alpha pool lenders are making whole. In addition to that, we are forming partnerships with DeFi insurance protocols to make sure that we have an additional layer of protection. So our latest announcement with Title Finance is a case in point. In addition to our beta pool, they will be coming in as a second layer of protection to make sure the lenders on NAOS protocol are protected.
Gotcha. You were saying these assets would default and it's inevitable, but what happens if I'm holding NAOS and these real world assets default?
That's a great question. It does not impact the NAOS price at all, right? Because NAOS is a governance token. Mm-hmm. So it will impact the lenders in the pool because we only take USDT or we only take stablecoins. So NAOS holders are segregated from any of the default by our design.
Okay, that's great. So I would definitely be holding more NAOS. Does NAOS have any competitors?
We do actually. We have a lot of competitors. So we're taking on the traditional finance industry, right? So banks, credit unions, all fair games, right? Mm-hmm. So I think if you ask us, what is the biggest challenge thus far, would be convincing or educating the real world borrowers that we are a better alternative to your current banking partners, right? We can offer better rates, we can have more of a transparent process, and we can be more efficient. And we can actually fund your global operation just through one channel, right? You do not have to interact with multiple different banks across the region. So on the traditional side, that's where we're competing. On DeFi side, I would say I have the most respect for Centrifuge. They just recently got listed on Coinbase. We are tackling the same problem right now, right? So there are a couple of different protocols that are coming into the space, solving this problem. This is a massive problem. So the way I always tell my team or tell my partners that in this space, in the direction that we're going, we really have no competitors. We have partners, right? Mm-hmm. So Centrifuge, all these protocols, we're all tackling the same problems. So give you a case in point, I would say the whole DeFi doesn't even exist until summer last year, right? When you say, when you look at Aave Compound, they haven't even scaled up yet, right? So if you rewind back to 2017 and 18 and say, hey, I want to solve this problem, it's not going to happen, right? Because you don't have the infrastructure in place, right? But fast forward to 2011, 2021, now you have Aave, you have Compound, you have MakerDAO. That's basically anchoring the entire DeFi ecosystem, right? You have DeFi protocols, insurance protocol that are venturing into real world assets with us, right? And you have Chainlink, who is co-developing the Oracle solution for real world assets. We all taking this sort of ecosystem approach to solve this problem. And in my opinion, like I can only pray for more people to come into this space.
Mm-hmm. Yeah. You sort of answered the next question I have, but what are the competitive advantages, if you want to get into the specifics, NAOS have that when it compares to like other RWA-backed DeFi projects?
I would say NAOS is uniquely positioned in a way that we actually hold financing license in multiple regions, right?
Mm-hmm.
So one of the major challenge that we see why DeFi is still sort of contained within the DeFi ecosystem without being able to tap into the real world is that, the real world is still clueless on how to interact with DeFi, right?
Mm-hmm.
So let's just say Coca-Cola, let's just say if they have financing needs, they're not getting it from Bank of America, they're not getting it from JP Morgan. Now they wanted to tap into DeFi. First of all, their internal legal is not going to agree, right? Their internal accounting and bookkeeping department is not going to comply. It's just that they don't know how to deal with DeFi, right? They don't know how to do KYC. They don't know the source of the ultimate source of funding. There's just a lot of things that the traditional companies will have problem dealing with. So, yeah, the way we kind of see it is that by having this financing license, we actually are legally able to interface with those real world companies, right? Now they have a legal entity that they feel comfortable interacting with, right? So I would say that's the biggest advantage that we have. But also, we are more fragile, more flexible, and we're more agile on how we design the protocol. So not just with the lending protocol, but we're building an insurance protocol on top of it. We're building a liquidity protocol on top of it, right? So that gives us a strong basis for scaling in the future.
Mm-hmm. Gotcha. All right, we'll be taking questions from our viewers. A lot of you guys have not included your YouTube ID. We'd love to answer your questions, but we gotta get your rewards to you. So please do that, namely Yao Ding, Wei Shan Tang. But we'll start with a question from HZ. It reads, without proper marketing and capital infusion, the project dies. So how do you convince us that you have enough marketing power and capital to push NAOS Finance to the top?
I think that's interesting. I would also encourage you to think about NAOS as a very different typical. We're not a typical DeFi project, right? Mm-hmm. So we're not the type of project that require a lot of hyping, get the retail to come in, hype up the price, and then drive up the token value, right? So the way we think about the progression of NAOS is that how do we scale, making the unit economics works, right? How do we be revenue generating at the same time profitable, as we go, right? Mm-hmm. So obviously, yes, we're venture backed, right? So being venture backed means we're not going to see revenue immediately, right? But at the same time, I think the business model is not something that requires a lot of innovation. I know this sounds kind of weird, right? But to be honest, lending is a century-old business, right? The demand for capital versus demand for lending it's been there for thousands of years, right? Mm-hmm. The problem is how do we bridge the two, right? So I would say back to the last question, right? So the major issue is licensing for a real world asset company, for a real world company feel comfortable putting their assets on chain, right? We have that covered, right? So for us, we're taking more of a B2B approach first, getting that business model work, getting that proven, and then we can scale it up to more traditional company and more retail lenders. So the way we look at marketing will be, how do we get our name out there? How do we educate the real world borrowers? How do we educate the retail lender about the risk, right? So for us, it's a little bit more about, hey, DeFi is here in the traditional market. How do you leverage that? And for the DeFi is, hey, there is a different type of portfolio management style strategy for you to take a look at. Would you consider that, right? So for us, it's more of an education for marketing.
Mm-hmm. Another question from Wei Sheng Tang. How do NAOS evaluate the value of intangible asset like NFTs and cryptocurrency as their price fluctuate highly?
Right. So one of the most important thing about real world assets is that the value of that underlying asset does not fluctuate that much, right? Mm-hmm. So when you look at Bitcoins or Ethereum, which is like it could fluctuate 10 to 15% on a daily basis, but for real world asset it doesn't, right? Mm-hmm. Let's take a most volatile real world asset, real estate, right? You have to do appraisal on a yearly basis or even monthly basis, whatever, right? But the value does not fluctuate that much. Well, I'm talking about normal circumstances, right? So our strategy is to focus on the asset that has stable face value, right? That's why we're focusing on corporate loans. That's why we're focusing on supply chain finance. That's why we're focusing on account receivables, right? Why? Because the capital that you borrow from the bank will never fluctuate. If you borrow $100 from the bank, you always own the bank $100, right? So the $100 face value will never fluctuate. So that's why we chose our initial capital to support or asset class to support carefully to make sure that we don't have to worry about the fluctuation, right? So now we only have to worry about the risk factors. How do we contain the risk? How do we make sure that the loans are paid in time? How do we maintain the default rate to be less than the insurance coverage? So we have one less variable to worry about in this equation. But not to mention, I think real estate definitely represents a huge market potential in the future, and we'll figure out a way to get there. But I think that has to go with our ecosystem partner. Can Chainlink support real estate data on chain, right? Can they get the real world data on chain on a timely basis for us to adjust that algorithm or risk pricing model, right? So there's just a lot of things that we have to kind of wait on the entire ecosystem to evolve. But right now, I think just focusing on corporate loans, focusing on supply chain financing, this is already a $1 trillion market.
Gotcha. We got another question from Jeff. Among the NAOS finance cryptocurrencies, China is considered to have the most potential, but China is currently cracking down on cryptocurrencies. So how does that impact you, or do you have any thoughts on this?
I definitely think the China ban has impacted the crypto industry quite a bit, right? But if you look at the first ban, the second ban, the third ban, the fourth ban, right? The effect on the market has decreased over time, right? So when we first experienced the China ban, the market literally crashed, right? BTC went down like 40-50%, right? But the most recent China ban, what do we see, right? We see the market dip a little bit temporarily and went back up. Now we're closing to all-time high within the last quarter or so, right? Mm-hmm. So I would say China definitely represents one of the largest crypto trading market, right? But when you look at business itself, right? Like lending, DeFi, it hasn't really been a major market for crypto, right? Especially for real world lending, right? China has a very well-placed financial infrastructure, right? So I think the demand for Chinese company tap into DeFi liquidity is not as urgent as what we see in Southeast Asia, when the banking penetration rate is less than 3%, the credit penetration is less than 5%, right? If you look at South America, if you look at Africa, right, only less than 1% of people actually holds bank account, right? So I actually see those regions has more opportunity to leapfrog from bankless to DeFi banking. And that's kind of where I see the opportunity. I think for China to adopt DeFi into lending is a frosting on a cake, right? I'm not saying the market's not big, the market's huge, right? But I definitely see a lot more opportunity in the market that's slightly more open. When you look at China back in 2007 or 8, credit card penetration less than 20%. But what do? They move from no credit card to Ant Financial, right? Now everybody has Alipay. You basically transform a society from no credit card to no cash. It has literally become a cashless society, right? And that's what technology can do for you, right? So I think if we have a choice, I would literally want it to be at the forefront of emerging market where there's literally no infrastructure, and NAOS will just come in and help the local companies to thrive, just because now they don't have to go through the whole banking process, the corporate credit card. Now they just go on DeFi. And I think that would really excite me to see the transformation in those regions.
Great. Yeah. One thing to add on our side, with the China ban, BitMart was serving the Chinese market, but now of course legally we can't. While like Huobi and like other competitors are sort of hit. Since our operations are in the States, we can help quality projects like NAOS to really push it out there, get more exposure. The next question we have is from Z. What's your opinion on the DeFi regulation challenges in so many countries?
That's a great question, right? The way we think about this is that we just have to be more compliant over time, right?
Yeah.
So I think this is a bit of conflicting in a way that the whole concept of DeFi is to democratize finance, right?
Yeah.
But you don't want to be regulated. But at the same time, I don't believe this is a zero-sum game, right? I see a lot of, I definitely see a lot of people talking about how DeFi is going to completely take over traditional finance, right? And I see traditional finance fighting back because of that comment. I don't see it that way, right? I see a future where DeFi and traditional finance have to coexist. And I think that's the way to go, right? Because if you look at internet, if you look at internet penetration on a global basis is not even 100% yet, and we have been internet for more than 20 years now, right? So if you said that we're going to completely bypass traditional finance and jump into DeFi, in the next 20 years, I don't think that's going to happen, right? And what's going to happen is that you create a lot of friction between traditional finance and DeFi, right? Regulator want to come in and clamp down on DeFi, and DeFi are just kind of keep fighting back. And when cases like China ban comes in, right, you're going to squash a lot of company or a lot of business models, right? So I would say technological innovation and being regulated are not conflicting in a way that, Singapore, Dubai, many of the countries in Europe, right, they have sandbox program for, innovative blockchain companies to basically introducing different type of business models, right? And we see regional licenses, right? Whether that to be exchanges, whether that to be DeFi payments, whether that to be DeFi has been issued, right? So I think doors are being opened up, right? We don't have to fight, right? But at the same time, we have to be cognizant that 99% of the business or economic activity still holds in the real world, right? Just because we're completely liberating the 1% in DeFi doesn't mean that we can tap into, the traditional finance or traditional economy. Obviously, I'm coming from a very biased perspective because NAOS kind of stay on both sides, right? But the way NAOS is going to work is that we're going to continue DeFi innovation. At the same time, we're going to try to be compliant so we can tap into that 99% of the economy or our market, right? And that's exactly where we're going. So in addition to the current financing licenses that we hold, we are in the process of getting additional license, let it be payment, custodianships, banking license in various countries. We wanted to make sure that we have those things covered, right? But at the same time, getting those licenses does not stop us from innovate on the DeFi and our project. Hope that makes sense.
Hope that, yeah. Last question from our viewer, crypto and cryptography. Said you spoke of alpha versus beta. Maybe you saw your shirt as well. You said beta is a little more risky money-wise. Is one better than the other? I think what he wants to ask is the difference between the alpha and beta pool.
Right. It really depends on your risk appetite. So both pool appeals to applies to stablecoin holders, right? So let's just say you are a stablecoin holder. You just want to lend to, you want to just do direct lending. I would suggest you go to Alpha Pool directly. One of the things that Alpha Pool will require you to do is that you have to be KYC, right? So that's where we are being compliant, right? So because the money is actually channeled from individual to the real assets, that's where the KYC has to happen, right? But if you don't want to go to KYC, the beta pool is actually a good option, right? Because you can take your stablecoin and put it in formation, and you will get NUSD, which is our stablecoins in return. Your capital or your principal will be locked into formation, and it will be kept safe, and you will be generating yield, right? So for you, that's basically yield generating sort of option. But at the same time, you can take the stablecoins, which is NUSD, and deposit into beta pool, which will earn you a higher yield than the alpha pool. But the risk for that is, in case of a default in the alpha pool, the beta takes the first hit, right? So there's a balance between the risk and reward, right? And the beta pool doesn't require KYC, so it's a pretty easy access there. But the way I kind of think about this is that if you lock your principal information and then start to generate yield, and you kind of lose your NUSD, the stablecoin on beta because of liquidation, you just have to lock into your principal a little bit longer to recoup that interest, right? But you never lose your principal in that sense.
Mm-hmm. That makes sense to me. I hope that makes sense for you, crypto and cryptography. That's a wrap. Thank you, Kevin, for joining us today. NAOS has just opened trading on BitMart the same time we started this AMA. If you haven't made an account, please visit bitmart.com. We're still running promos for NAOS after this session is over. And to read more about NAOS, please visit naos.finance. We'll see you next time. Bye, guys.
All right. Thanks, guys. Thanks, Jason.